Hello everyone, I'm Chloe Johnson and welcome to this Fresh Business Thinking webinar series, Lockdown Learning for Businesses, supported by BT. BT Skills for Tomorrow aims to empower businesses and their employees with the digital skills to help grow their business. The Skills for Tomorrow website includes free learning content that small businesses and their employees can access at any time, on topics such as connecting with customers on a mobile, making sure your customers can find you online, and much more. To find out more, you can click on the link in the comments. Coronavirus is continuing to be a challenge for small businesses and entrepreneurs across the UK. The outbreak leaves an overwhelming uncertainty into the futures for business owners. But this is a time when, as a business community, we need to come together and support one another. And we're lucky enough to work with organisations and individuals who are passionate about supporting entrepreneurs during this time. One of those is our speaker today, Linda Ezekiel, the Regional Director of R&D Tax, with 10 years experience in helping SMEs benefit from UK government research and development tax credits. Today, Linda will give you all the information you need for claiming back up to a third of your costs spent on developing new products, processes or services. Linda will be talking for around 40 minutes and then we'll have some time for Q&A. If you do have any questions, you can leave them in the Q&A function at the bottom of your screen and we'll do our best to get to them later on in the session. That's all from me for now and I'll pass over to you, Linda.
Hello and welcome. Thank you very much for joining my webinar. I know that it's a challenging time for many businesses, a lot going on. So I hope that for some of you, those that fit in with the scheme, you may be able to learn how to get some extra cash into your business from my presentation on research and development tax relief. Towards the end, I will be going through some case examples, but I'll start off with the more technical side of what means that you can qualify for R&D tax relief and tax credits and what are they. I've also got a giveaway for startup companies, which I'll run through at the end. So I'm going to go across to my slides now. So let me get my screen share up. Okay. Learn how to get extra cash into your company within 30 days. The scheme is really good and quite rapid, and I'll tell you why as we go through. So this webinar is designed for founders and directors of small and medium enterprises, but sometimes it's also very beneficial for your tax accountants as well, because not all tax accountants understand how this works, even though it is worked through the tax system. So I'm going to cover what are R&D tax credits, how do they work, how do you get them, and what not to do when you're making a claim. But let's just do a poll right here at the beginning so that I can get a feel for my audience today. So I'm going to ask this question, and here you go, the poll's on screen. Tick which one applies to you. How much do you know about R&D tax credits in the UK? Okay, great. Looks like most of the polling is done. So that's brilliant. So a few people who know quite a bit, one or two who have experience, but a lot of people in the middle, which is, I've heard about them, but I don't know much. And that's quite common because there is still a lot of misunderstanding or not sufficient knowledge out there in terms of what they are and how they work. So hopefully I'll be able to dispel some of that misunderstanding and hopefully give you a good overview. There. The results are shared with you now. I've heard of them, but I don't know much. 52% of my audience. Great. So let's move on. So just a quick overview. What is the big idea? Well, research and development tax relief and tax credits, and those terms are used interchangeably. They're the same thing, R&D tax relief, R&D tax credits. They're a government scheme designed to incentivize businesses to invest more in innovation, developing new products, processes and services by giving you back money through the corporation tax system. And the research has shown, and the belief is that that will help to stimulate the UK economy, help businesses to grow and develop more jobs, and generally be good for the economy. So That's the logic behind it. But before I go into too much detail, let me tell you a little bit more about me. Linda Ezekiel, Regional Director with R&D Tax. Our company trading name is R&D Tax. It's Terry Toms and Partners Limited, and we've been specialists in research and development tax relief since we set up in 2012. And RMD has a history of working in the R&D schemes since they started way back in 2000. And I personally have worked with over 100 companies, and R&D Tax has supported well over 1,250 companies now. And between them, the benefits that they have got, cash benefits into their businesses, is in total 135 million. So quite a significant amount of money, which we're really proud to have been able to help companies to raise. The number of claims, therefore, is well over 4,000, and the number of R&D projects that we've looked at and helped people to qualify is many, many thousands. Just a quick look at what the value is of the scheme. So this is how much money is the government putting into supporting businesses to innovate under the R&D tax relief and tax credit scheme. So this looks at the whole period from the year 2000 to 2001, right up until 2017-18. There's a lag in data because you can go back and claim backwards, which I'll go into more further down the webinar. So the 2017-18 figures are not yet complete, but in that year, so far, with the data in, 2.5 billion went to small and medium enterprises. So a really good chunk of money. And that's probably going to rise to 3 billion by the time all the data is in. So it's a very good scheme from that point of view. It does give out a significant amount of funding. And just a quick look at where it's going, which industries, which sectors are getting the money. So professional, scientific and technical have the lion's share, with 640 million going to those sectors, but closely followed by information and communication with 625 million, and manufacturing industries as well. There's a lot of R&D in manufacturing, 490 million, and so on. And there's some other sectors that are not listed on this slide that got smaller shares. So there are two UK schemes for R&D tax relief. There is the RDEC scheme, Research and Development Expenditure Credit for large companies, and the Small and Medium Enterprise scheme for the smaller companies. Both schemes are only relevant to UK registered limited companies. So you can't be a sole trader, you can't be a limited liability partnership structure or a charity if you want to qualify. You've got to be a UK registered limited company. And there are a couple of other qualification checks to make sure that you're an SME as well. The qualification criteria are that to be an SME, you have to have less than 500 employees, and you must be able to say yes to one of the following two as well. Either 100 million euros turnover in the relevant accounting year, or under 86 million euros on your balance sheet. So you've got to meet at least one of those. Most of the companies that we work with are much, much smaller than that. And you have to obviously do the currency exchange into pounds to check it. The benefits for those companies with fewer than 500 employees are basically that you can get back between 18% and 33% of the expenditure on R&D. And of course, I'll talk about what sort of expenditure that is. For the large company scheme with more than 500 employees, the benefit is 11% of your expenditure, your R&D costs. So obviously the SME scheme is far more generous. There are a couple of other checks for the small and medium enterprises which relate to when a company is corporately owned. So that means if your company is, the shares in your company are owned by another company, or your company owns shares in another company, then you may have to add together those criteria. So the number of employees and the turnover and the balance sheet values to check whether you qualify. If it's wholly owned, it'll be all of them added together. If it's partly owned, it'll be based on the portion of shares. It gets a bit technical at this point, so this is just really a heads up that if you have corporate ownership of your shares, or you own the shares of another company, you just need to look into that before deciding whether you qualify as a small and medium enterprise or you should be under the RDEC large company scheme. Okay, now we're getting into the more nitty-gritty, interesting part. So what qualifies as R&D for tax credits? Well, it's interesting actually, because sometimes even HMRC government advisors differ in their judgment of what is or is not R&D for tax credits to fit into the guidelines of the scheme. But in general, the guidelines, there's a lot of them, but they are fairly comprehensive, and there aren't too many grey areas. But the one area I think where most people have difficulty is in software developments, because the software industry is moving very quickly. So what was R&D maybe 2 years ago may not be R&D now. So how to decide in the software industries and software development what is or is not R&D can sometimes be tricky. And there are some case studies that were now published a couple of years ago, so even they're already getting slightly out of date now. But there are some case studies that were produced by government to help people understand that. But other than that, the guidelines are fairly clear, and I'm going to run through a bit more about what's in them. So to qualify as doing research and development, clearly you've got to be innovating in some way. So that usually involves investing brain time, talent, or resources into developing something, one or more new or appreciably improved product or process, or it can be a service. So in that development, there must be complexity. So it's not enough just to say, oh, we've developed a new product. The new product has to have something in it that makes it innovative. So, for example, the kind of things that would imply that you were probably doing something that qualified would be that you need to do technical option appraisals to work out the best technical approach to what you want to do, or you may need to prototype something before you can decide on whether you have a product that is able to be made, manufactured, or there may be trials and testing involved to work out the best way to do something to get to the desired outcome. Or it might even be a question of feasibility. So actually, you don't actually know if it's scientifically possible or technologically feasible to do what you want to do until you try. So there, obviously, you've got to do some experimentation to work out how to or whether you can do it. And these are referred to in guidance, in government guidance, as making an advance in knowledge or capability in a field of science or technology. This part is critical to understand. There is a very specific definition of science, and it relates to the physical sciences. So things that you can taste, touch, hear, see, or smell. So it's biology, chemistry, and physics, or developments involving technology, software, or hardware. So the physicals and sciences, biology, chemistry, and physics, have to be the sort of area in which your activity touches. So it can't be social science, the science of human behavior, economics, arts, pure mathematics. Those things, even though you might be doing something pioneering in those areas, they don't qualify under the guidance. So to give you a practical example, let's say you're working on helping people with eating, bad eating habits or eating addictions, and you do a study with leading psychologists to understand the behaviours that lead to that, and then you develop a pioneering method to help people to break those habits, and it's all about human behaviour. And no matter how novel that might be, that wouldn't be R&D because it relates to the social science of human behaviour and human behaviour. But if you then decided, okay, let's see if we can make a product, a food product or a drink product that helps to inhibits people's hunger pangs, let's say, and so therefore you go to develop that. So that can very well be an R&D product and qualify, because you will be doing things that relate to the physical sciences of biology and chemistry. Or it might be you decide to create something that's a wearable piece of technology that maybe monitors people's metabolism so they can see what the impact of different foods are on their system. And again, that would qualify because that's a physical product, and it also links, so it's technology, and it also links to the biology of a person, the physical behavior of the human body. So it's important to grasp those different definitions and to understand that the R&D scheme relates to the physical sciences, things that you can taste, touch, hear, see, or smell, or they involve technology, software, and hardware development. And I will be giving examples later on that will make it more concrete, hopefully. But that means there's a lot of industries where R&D is common. So software applications, so that will be your artificial intelligence, machine learning, robotics, technology systems, automation, all of those sorts of things. Food, the technology that's used in food production or in agriculture to improve breeding methods or to improve growing yield production, all those sorts of things. In fact, any technology, generally speaking, if you're working in the area of applying technology to something, you're probably, and it's new, you're probably doing R&D. Also, the development of gadgets and equipment, so that can be anything from lawn mowers to washing machines to hi-fi to mobile phones, R&D in developing products or improving products and equipment and gadgets. And likewise in the packaging world, so that might be packaging materials or methods to package things, maybe to package food for improved shelf life or to improve how things are held in packaging if they're fragile. If you're developing new processes, methods or new materials there, that can well involve R&D. And recipe development, so that could be food recipes, chemical formulas for cleaning substances, or it could be cosmetics, so anything, or plastic formulas for making plastics, so raw plastic formulas. Anything that involves developing and improving substances and recipes for manufacturing processes may well be qualifying R&D. Likewise, materials, so it can be materials for using in construction, new types of material surfaces for products, or it could be fabrics that we wear, more breathable fabrics, more stretchy fabrics, more waterproof fabrics. Again, anything where you're aiming to make an advance in knowledge or capability in how those things are created and the properties that they have. Also, a lot of R&D in the engineering and construction world. So in construction methods and new pioneering engineering methods to create unusual buildings or complex engineering designs and manufacturing processes. So developing machinery for manufacturing where you're doing more than just buying a piece of equipment and putting it in your factory. Perhaps you have to bespoke it. Perhaps you're building a piece of equipment for the first time. All of that sort of work to improve and develop a manufacturing process may well include R&D. Renewable energy and bioenergy, a lot of R&D there, obviously in solar panels, wind farms, and all of those sorts of methods for creating renewable energy and improving sustainability through how energy is made. And life sciences, so things to do with the human body and health, and to do with farming and agriculture, where you're aiming to improve how things are treated, health treatments, or maybe seed breeding. So perhaps you're trying to get a better yield from a seed and you're working on breeding the seed, or how you are increasing the yield. Perhaps if you're growing plants, new methods of growing plants and improving the whole realm of things that go on in those worlds, and many other developments and activities as well. So that's just to give you a quick broad brush sweep across them all. So obviously a lot of different areas where there's potential for R&D claims. But just a quick look at who decides if there is or isn't R&D, because that's obviously a key question. The government has a concept which is expressed in their guidelines of the competent technical professional in the relevant field. So that is the person who has the experience and the knowledge and or the education to know where the cutting edge is in their field, and to know what would therefore be R&D and what wouldn't be. And it's not about the knowledge in your own company and what you know as a company and what you know within your company. It's about the knowledge within the industry sector per se. So if you make an advance, it has to be against existing knowledge within a field. So that means the knowledge is not available. Otherwise, if it was there and available, you wouldn't be creating new knowledge or capabilities. Or if it is available, it's a trade secret, so you don't have access to it. So it's quite okay to do a development in something that someone else has already done. In fact, it can also be old technology. I have a client who uses valve technology to make amplifiers but creates new products, and that's equally R&D. So it doesn't have to be state of the art, but there has to be properties around it that makes it new, that hasn't been done before in some way, or at least, if not completely new, that you're advancing something. So you could set out to create a whole new method of creating spreadsheets. If you were doing it in a different way and you had a sound reason, you were going to make it cheaper, or you're going to make it faster, or it could perform better, whatever it might be, then that still can be R&D. But if a competent, and failure is equally R&D. Obviously you don't have to succeed. There's a lot of failure in R&D, otherwise it wouldn't be cutting edge stuff if there wasn't room for you to maybe not achieve what you want to do. But if a competent technical professional in the relevant field can readily deduce what needs to be done, or there's information available in the public domain on how to do it, then it's not R&D. So the person that would be making that judgment is your competent technical professional, the person that works in your company, a salaried employee, or someone that you've hired to do that work for you. So I advise companies every day on claiming research and development, tax relief and tax credits, but I'm not a software engineer, I'm not a scientist, I'm not a knowledgeable person in all the manufacturing processes. So I help them to understand the guidance and come to the right judgment, but the judgment is theirs, and I shouldn't make that judgment. HMRC wouldn't recognise me as competent to make that judgment. Likewise, your accountant shouldn't make that judgment for you. They're not competent to decide whether you're doing R&D. HMRC has this concept, and if they believe that your competent technical professional is competent and has the relevant skills and knowledge and experience, and you all will, where you're doing things at the cutting edge, then they will accept, generally speaking, that your judgment is sound. Very important point. So looking now at how the benefits are paid. The R&D benefits are paid and claimed through the UK government corporation tax system, and you can go back 2 years based on your accounting year end. So it's not like a grant where you have to do a big application process, although there is information that you need to compile, which I'll talk about in a moment. But you can go back 2 years based on your accounting year end. So this is retrospective, so you may already have money that you can claim. So the 2 years, so let's say, like many companies, have a year end at 31st of March. So if you have a year end of 31st of March, right now you can look back and make a claim for your year ended 31st of March 2020 this year, and the year ended 31st of March 2019. But as soon as we get to 1st of April next year, 2021, you can no longer claim for the year ended 31st of March 2019, because your 2 years then at that point are the year ended 31st of March 2020 and 31st of March 2021, and that's a drop dead deadline, so you've got to meet it. You'd be really disappointed if it's 3 days after your year end and you find that you have a big claim that you could have made if you had moved more quickly. So the R&D claim is integrated into a company's annual corporation tax return. So it's part of your tax return, and the benefit is based on the amount of qualifying costs, the R&D expenditure, revenue expenditure in the relevant accounting year. So it's not about buying equipment, buildings, or building things, or any of those things. It's literally about revenue expenditure, which I'll talk about more in a moment. And just to mention as well that if you did, let's say you spent a lot of money in the first 3 months of this year on R&D, and your accounting period is not going to end for another 6 months. If you really need the money and there's money there to get back, you can shorten your accounting period and just do a 3-month or 6-month or 9-month accounting period and then get the money back in. So it's worth thinking about that if you really need money and you have a claim that you could make for a recent period of time, which you otherwise would wait until your year end to do. The other thing is just to mention that there are R&D schemes all over the place, all over the world. Different countries have different schemes. So if you can claim and you're not claiming, you're at a competitive disadvantage against those people that are doing similar things to you and are making a claim. So it really is worthwhile making sure you've checked out properly whether you can benefit from this scheme. The SME R&D scheme is calculated in terms of the benefits in a quite different way from the large company scheme. So I'm going to talk about just the way that the small and medium enterprise scheme calculation is worked out. It's a little bit technical, so bear with me. And if it's not quite clear, don't worry. You can always have a chat to me later, or whatever. I can clarify it for you further down the line. But the R&D claim is like an additional piece of expenditure in your accounts. So at the end of the year, you will have spent money on doing your developments, and when you look at your profit and loss, you'll have a certain profit or a certain loss position. But the R&D, it's called the R&D enhancement, is an additional deduction. It's like double counting, except it's 130% of your R&D costs. So you can deduct a further 130% of your R&D costs in the relevant year. So if you had a profit, that additional deduction could reduce your profit to zero. So given that you have to pay tax on your profit, that will save you tax at 19% of whatever that amount is. If you didn't have a profit, if you had a loss, the R&D enhancement will increase that loss, giving you a larger loss. And instead of carrying forward that loss to offset profits in the future, you have the option of surrendering it and taking a cash payment against it. And the cash payment rate is 14.5% of the relevant loss surrendered. So it's a little bit less than 19% tax, but sometimes cash now is really important for a business. So just to give you that in simple terms, the R&D enhancement, the cash benefit that you get from the R&D enhancement is worth between 18% and 33% of your R&D costs, depending on your profit or loss position. So if you spent £100,000 on research and development, the benefit that you would get would be between £18,000 and £33,000. If you spent £400,000, the cash benefit should be between £72,000 and £132,000. If you spent £10,000 on R&D, then the cash benefit would be between £1,800 and £3,300. I'm going to talk a little bit more now about the claims process, what you have to do to qualify to make a claim. So to make an R&D claim that complies with HMRC guidance, government guidance, there are two things that are needed. The first is a written document, what we call a technical justification, describing a sample of the most costly R&D projects that you did in the year. In the accounting year, we're always looking at the accounting year. So if you had 3 or less projects, then the technical document should cover all of the projects. If you had more than 3 projects, then you should describe enough to account for at least 50% of the R&D costs that you're claiming. Or if 10 projects don't even yet reach 50%, then a maximum of 10 projects. So you've got your written descriptions, you also need your total R&D costs, and they need to be broken down against the R&D cost headings, which I'll talk about in a moment. And also you need to know the total cost per project for the projects that you described in your technical justification. So the R&D technical justification, it's not War and Peace, it should be a short document, but it needs to be a document that addresses the right factors and the right points. So the points that need to be addressed, broadly speaking, are you need to explain what the scientific or technological knowledge or capability was that existed at the start of your project. So as I was talking about before, if you're making an advance in knowledge or capability, you need to know where the starting point was in your industry or sector. So broadly, what is the baseline against which you're making an advance? Either this product didn't exist before, or this technology used to behave this way, but we've invented a way of making the technology work more quickly and manage more data by doing it another way, that sort of thing. And therefore, you need to be able to say also what the advance was that you were aiming for, that built on that knowledge or capability, that built on the baseline. And as I mentioned, it can be an aim. If you fail, if you spent a lot of energy and time and resources in failure, that's fine. That could still be an R&D project that you can claim for. So you need to be able to describe what the scientific or technological uncertainties were that you were faced with that made it R&D. So what were the complexities? Because if something was already known, you knew, it was known how to do, then there's no complexities. You can just do it. You can follow the blueprint. So you need to be able to say why you couldn't follow the blueprint, what the things were that were difficult to work out to resolve in order to get to the development that you wanted to achieve. And then what you actually did to overcome those difficulties. So a description, a brief description of the activities involved in developing that product or process or service. And in terms of the cost breakdown, you need to identify, of course, the total expenditure, but then it needs to be broken down by the various cost headings. So the biggest one is often staff salaries, time spent on R&D by people employed in your company, and you can claim 100% of the relevant cost. So the relevant cost is the gross salary, the employer's national insurance, and any company pension payments. So if those come to £50,000 for a member of staff and they worked half time on R&D, on your R&D project, then half of their salary costs would be R&D. So if you paid them 50,000 and they worked half time on R&D, or at least the total salary cost was 50,000 and they worked half time on R&D, that's £25,000 as an R&D cost in your expenditure when adding up your total costs. If it's a subcontractor, you have to work out the total amount that was invoiced to your company for R&D activities. That might not be the total invoicing because it might not have all been R&D activities that you subcontracted, but you work out the total that was relevant to the R&D project, and then you can include only 65% of it. There's a discount there. It's 65%, that's what the guidance says. Likewise for agency staff. So if you employed staff through an agency, so the agency paid the member of staff and you paid the agency for staff to work on your R&D projects, you can claim 65% of the relevant portion of the invoicing in proportion to the amount of time that that member of staff worked on your R&D. You can also include materials that were consumed, so that's wasted product or wasted materials in prototypes, and it also includes energy, gas and electricity, and you can include 100% of the relevant amount of materials that were consumed and wasted and used up in the R&D project. So you need to work out the cost between each of those headings, and you also need to work out the total cost per project for your largest projects. Again, it's the ones that you described in your technical justification. Okay, so that's broadly how the R&D schemes work and how you can look at whether you qualify or not. But just to mention, there is a lot of quite poor practice that does go on in terms of information that's given to HMRC, either incomplete information or information that they're not asking for rather than information that they need, so meaningless information, or worse still, incorrect information. And HMRC doesn't have time to look at all the claims. In fact, they don't look at very many claims. They look at a small percentage of claims each year, but they do aim to look at all claiming companies at some point. And if they look at your company 5 years, so let's say you're claiming year after year, which many companies are, so 5 years down the line, they look at your company and they find that you haven't done a good provision of information, so it's incomplete or it's got errors in it, then they can go back over all of those 5 years, and they can go back up to 7 years, and they will seek to claim back money. They may even fine you even for the legitimate amounts that you otherwise could claim if they think that there's been bad practice, sloppy practice or malpractice. So they do spot checks and they do give fines. So it's important to do a good, thorough claim. If you do a proper, complete claim, they may argue with you about any of the grey areas, that's fine, but they would be minded to approve it. And they can only go back 2 years and look at your 2 open years if you've given them good and complete information and there's nothing new for them to discover. So it's like an insurance policy. Doing your claims well is your insurance. And I say it's a bit like playing Russian roulette. You may not get hit the first year, you may not get hit the second year, you may not get hit the third year, but you are risking getting a bad hit by HMRC if you do poor and incomplete claims or overinflated claims. So do take care when doing research and development tax relief claims because you don't want to fall foul of HMRC. It's important to get it right. So just to recap, to qualify, you must be a UK registered limited company, and to qualify as a small and medium enterprise, you need to have under 500 employees. All other companies must claim under RDEC, which is over 500 employees. And they're the other two things as well, the turnover of your company and the balance sheet values that you just need to check to make sure you qualify as an SME. And you need to be developing a new or appreciably improved product, process, or service. And that needs to involve or be linked back to the realm of the physical sciences or technology, hardware and software development. And the development process has to be more complex than just routine work. So it requires innovation as judged by your competent technical professional in the relevant field and sector. I want to say a couple of words about using a specialist advisor. Of course, I'm one myself, and specialist advisors can help you to cut through all the guidance and get your claims correct and speed up the process and save you money. But like anything, you need to make sure you choose carefully, look at the rate of the fees that they charge, the reputation of the specialist, the quality of service delivery. Not all provide the same service. Some will give more support, some will give less support, some will be more open and transparent in what they're doing, others will draw a veil of mystique over it all. And you need to look at whether they will save you time and money ultimately, because a good consultant will help you make sure you get the maximum benefit with the minimum risk. Right, now I'm going to go through some case study snippets. So just quickly give you an insight into some of the claims that we've done, some of the claims we've worked on in our company. The first one is a brewery, so this one is one that people like a lot. The brewery was a specialist in beer production, fairly early stage business, creating new and innovative types of craft ale and lagers. So they were working on the appearance, the taste and the aftertaste, and the actual physical factors of the beer. And they also developed innovative equipment and bottling and canning processes as well. So in the first year, the claim value, the amount of the cash benefit to them was around 31,000. In the second year, 18,000, and in the third year, around 54,000. So that's a brewery example. This one is a virtual image software developer. So they're working in the realms of software for creating imagery, developing enhanced images that can work across multiple platforms, and dynamic image presentation in the retail sector. So tracking customers and providing them with information, imaging, creating, for instance, a visual representation of a package being unwrapped around a product, and 3D presentations for all sorts of different uses in industry. So very specialists in their field, and they invested a lot in R&D. So in the first year that we worked with them, £130,000 as R&D tax credit. In year 2, 132,000, and in year 3, 80,000. Right, this one is electronic circuit board design and manufacturing. So a company that specializes in making electronic circuitry, which again is quite a fast moving world. There's always new and ever more microscopic components, and the circuit boards can be multi-layered, and they're working sometimes with a large company, sometimes just developing their own systems and processes, but developing new printed circuit board designs and prototyping those to go into other people's equipment. Development of new manufacturing processes that are kinder to the environment, obviously an important focus, and experimentation to develop their printed circuit boards to withstand extreme environments, extreme heat or chemical corrosion, or extremely cold temperatures as well. So a lot of R&D there. And again, 6,800 in the first year, 34,800 in the second year, and 59,000 in the third year. And they were all as tax savings because they were a profitable company, or they are a profitable company. This one is lighting fixtures and fittings, a lighting fixture and fittings designer, a market leader in the design and manufacture of luminaires to meet a variety of commercial and residential needs. So developing lighting solutions that offer very specific ambient lighting, development of lighting, for instance, for use in art galleries, but also working with large contractors to develop lighting for huge construction schemes, airport terminals, undergrounds, all of that sort of things. And they did have some award-winning innovative design. So again, the world of lighting is moving quite quickly. You've got all the LED lighting now, and there's an ever more need to make lighting that reduces energy consumption as well, and also obviously uses the latest technology. This one is the design and production of industrial workstations. So an engineering company, leader in the automotive industry, pioneering in how they help people to manufacture goods, cars and so on. Developing complex assembly and automated wrapping production techniques. So they actually develop workstations for the production line, transforming ideas and systems from CAD into a fully designed prototype, and creating the production processes to handle all sorts of bespoke shapes and curves and moldings and so on for the production of vehicles. So that's the quick romp through some examples. I hope they gave you a better idea in practical terms of the kind of things that people are claiming R&D tax relief and tax credits for. I just want to say a couple of words about us. And this is referrals that we've had. So this is an actual company, Alternative Soft, fintech company, just saying good things about us, that they have worked with us since 2014 and they're still working with us now, and we've helped them to save a lot of money. And they're just a small company, and the R&D investment has been critical to help them to grow their company. And this one is a metal fabrication company, Bailey Fabrications. They were a bit nervous about claiming research and development tax relief because they work with main contractors under local authority, big construction schemes, making things like balconies and bridges and staircases. And they were concerned about keeping their reputation because they have to go through a very rigid qualification quality control process, and they didn't want any issues with HMRC that could affect their reputation. But it's all gone smoothly for many years, and they're very happy with our service. We also work with accountants. They use us as their expert arm because many accountants don't understand research and development. They don't know what qualifies and what doesn't qualify. They're not very good at helping companies to write a technical narrative about what they do. They might be a bit better at the financial side. So we work with them as their specialist arm, and this is a testimony from one accountant based in Southeast London. And here's another one I will just quickly romp through. They're just saying we're good at recognising and scoping and describing what is the qualifying R&D. Okay, last but not least, we'll come to questions in a moment. We have a giving back scheme for SMEs. It's a free advice and consultancy and support service for startup businesses doing their first R&D claim. There is a small selection criteria in that we want to make sure that there is a good claim and that we believe in it and can support it. But there are no strings attached in respect of using us for future years. Of course, we'd love it if the company did, but that is not the purpose. The purpose is to give something back to help startups, because we know that it's really, really difficult getting a company off the ground, and especially if the company is investing in innovation, as many companies are. So I can tell you more about that if you're interested, just let me know. And then we'll go to questions. Oops, I have a little musical bit here. I've set time aside over the next few days for you to book a free Q&A session with me. So any questions or queries that I don't get to answer now, of course we're going to answer some now, but if I don't get to answer them now, or if you want me to look at whether your company could qualify, you can book straight into my diary a time that suits you to have a chat about it, and a telephone call, and I'll give you a ring. So there's the URL for doing that. Okay, I think Chloe's going to have a look at what questions has come up and feed them back to me.
Thank you very much, Linda. Let's have a look at some of the questions that we've had come in. So the first one is from Maxine. Would a CIC be able to apply?
Yes, if they are limited by guarantee, which they probably are. So if they're subject to pay, if they make a profit and they're subject to pay corporation tax when they make that profit, then they would qualify, yes.
Next question is from Tristan. What are the common mistakes SMEs make in their claims or the claim process?
Gosh, that's a big question, a very big question. Common mistakes. Well, I think first of all is including costs that don't qualify. So there are a very specific range of costs that qualify, and people may put in a portion of rent or rates or perhaps hosting costs or telecom costs, a whole range of things that people will include that don't qualify. So that's one problem. I think another one maybe is not involving their technical specialists. So they write a technical justification, but actually it doesn't make the case, it breaks the case. They talk about things that don't qualify and they don't emphasize the things that do qualify. So even though they may have a good claim, they haven't expressed it well, and that can lead to HMRC asking difficult questions later on. I think that would probably be two of the big ones. The kind of cost, another kind of cost that people claim which you can't is dividends, when dividends are paid to directors. So that's not a salary cost, and those costs can't be claimed. So there are often mistakes there. What else? Just not correctly understanding what parts of a project do qualify as R&D, and perhaps including things that don't qualify is easy to do when you haven't got a firm grasp of the guidance. I think that's a brief overview. There are so many areas, but those are probably the big ones.
The next question is from Pranav. Can you explain what falls under the physical sciences category?
Well, it's all the things that I've tried to explain. So it's anything within the world that links back to the chemistry, biology, and physics. So it would be a whole topic of a lecture probably to go into it in detail, but in other words, it's not social sciences, it's not economics, it's not mathematics, it's not the arts. So it's got to be something tangible that you can touch, taste, see, smell, hear that you're doing. So for instance, if you were to reorganize your office in a whole new novel way, and you said that cost a fortune, and we've introduced a different way of managing everything and the process and how our operations work, that's not R&D if it's not a physical thing, it's just a process, a method. So, but once you start creating things, products, tangible things, or things that use technology, then you're in the realm of the physical science or the technology, then it qualifies. It is one of the hard areas to get a grips with initially, but all those examples, obviously, they all relate back to the physical sciences. So that's the guide, really. Tangible things.
The next question is from Oliver. Kieran. I've always understood that this is an EU scheme administered in the UK by HMRC. Has the government said what the future is for this after December 2020?
It's a good question. It's not exactly an EU scheme in the sense that the EU puts any money into it, but it is EU regulated. So the EU countries agree with them what the scope of the scheme is, because basically R&D tax relief and tax credits for small and medium enterprises is so generous that it counts as state aid. So it comes under state aid rules. So that means there's a ceiling in terms of how much can be given. So at the moment, as I said, the R&D enhancement is 130%, so it's quite generous. So that is probably at the ceiling that Europe would approve. It has to be negotiated with Europe. So once Europe doesn't have to approve it anymore, it could go in any direction. It could become more generous. The government could put actually more money into the scheme, and some people think that they may do that. So it doesn't necessarily mean that it won't continue once we leave the EU. It could continue, it could even be improved. So there's no barrier to it continuing as such. And the only thing at the moment that will change is that at the moment it's regulated by the EU, and after we leave the EU, it will no longer be regulated by the EU. So it can potentially change, but it doesn't have to.
And this one was Oliver's question. Having a granted patent means you can demonstrate a novel solution to a technical problem. Accordingly, is it any easier to successfully claim R&D tax relief with a granted patent to overcome the complexities test?
Well, I think it's definitely good that you've got a patent. That obviously demonstrates that you've done something that's new and different. So that helps, yes, but it's not essential. There are many, many claims where people don't have a patent and they're still successfully claiming, including, for instance, what people might consider isn't a strong case for R&D, such as in manufacturing industries where people are precision engineering new parts, and each part they have to work out the production process for a new part, and that is considered R&D. If it's a complex part and they have to work out the CAD drawing and then how to set up machines and to lathe something. So that's an example where people might say, well, is that really R&D? But it is considered to be R&D. So that's nowhere near getting to the point where there's a patent required, but nevertheless, they still qualify. So yes, it obviously helps, but you would still need to do a little bit more to say what you did to create that patented product.
Fantastic. Well, that's all the questions that we've had today. Is there anything you'd like to add at all, Linda?
There is one thing that I'd like to mention, which is that to claim under the small and medium enterprise, you do need to take and hold the financial and commercial risk of the development. So you do need to, you can still be working for a client. So if you're working for a client, they may pay you, but it can't be a guaranteed payment. It has to be a payment on results. So you have to hold the financial and commercial risk. If you don't, then you can claim, but only under the large company scheme. So that's a less generous scheme. And likewise, if you had a grant to subsidize some of your R&D, then the part of your R&D that was subsidized by the grant may have to be claimed under the large company scheme. There's a lot of details around grants and R&D. They can work together, but they do impact in a way that the R&D claim may change, depending on the grant and where it came from and what it's for. So that's just a little bit more detail there. Otherwise, great to have had the opportunity to run through this presentation. As I said, I'm open to people booking a time to have a chat if they think they may have a claim, and brilliant that everyone attended. It's a really tough time at the moment, so thank you very much to everyone for taking the time to attend my webinar.
Linda, thank you so much for joining us today. If there is anything you'd like to catch up on from today's webinar, there will be a replay coming shortly to our social media channels. And if you would like to book in a session with Linda, you can follow the link in the comments. Our next webinar in the Lockdown Learning for Business series takes place on Tuesday, the 19th of May, with Mitch Turner, MBE, founder of Little Venice Cake Company, who will share her previous experiences to give you the confidence, resilience, and practical approach to cope with the unexpected. If you haven't already, you can register for this webinar with the link in the comments or head into freshbusinessthinking.haysummit.com. Thank you very much for joining us today, and thank you again, Linda.
Great, thank you. Bye-bye.